Guys, market was down big today. The NASDAQ down almost 1%, but Micron was up 1% during the day. Just reported up 3.2%. And here's what they reported. They reported revenue of $11.32 billion, beating $11.16 billion. And they reported earnings of $3.03, beating $2.79. So like I said, the stock is up big. Guys, Micron actually used to make computers. I'm pretty sure it's the same Micron. I bought one of their computers back in the mid to late 90s. I loved their computers. They don't make computers anymore because it's the same logo, I believe. But I used to love their computers. That is my personal affiliation with Micron. Now, it's up 1,000% in the last 10 years, 233% in the last 5 years, 78% in the last year, 91% year to date. God, that's a lot of growth for a company like this. $187 billion market cap. Generated, so here's what's interesting. Okay, I don't like this. First red flag for me. We've got $1.88 billion in free cash flow last year versus $6.23 billion in net income. Now, obviously this channel, our Everything Money Now Plus channel, we want it to be for people who want to go a little bit more in the detail. So this is important. When there's a big difference where net income is significantly higher than cash flow, you've got to understand why. You need to understand why that is. Why are they spending so much on capital improvements? Is it because they're lying? Because that could be a sign of fraud. Not saying there's fraud here, but it could be a sign of fraud. And their 5-year net income is $3.16 billion versus $228 million. That's also a huge difference. That's what, 15 times greater, 14 times greater? So you got to do some more research and realize why that is. I'm still waiting for Micron to post their quarterly results in terms of the actual press release, because we're going to dig into that. But if you look right here, the price to free cash flow is 100. Their PE is 30. Now, if you think the free cash flow is low because of capital improvements and only that reason, then that's something to look at. But that's a pretty high number right there. I don't like that very much. 3-year growth rate in terms of revenue, only 1.5% a year. And look at this. The 5-year profit margin is 12%. 18.4 last year. Low returns on capital. I think this is the company that Monish Prabrai loved when we met with them. We interviewed him in Austin, Texas. I think this is the company he loved. Yeah. He loved Micron at like 80 or 90 bucks a share, so he's doing quite well on it. Datarama, he might still own the stock. Let's see what analysts think about this company. Well, here's what's interesting. This is pretty weird. 826 to 13 to 14 to 14 down to 11. This is all over the board. Revenue, 48% increase, 31%, 7%, 3.5%, 6% decline. Wonder what the reason for that is. This is very, very odd. So immediately I think to myself, this is my personal opinion. Doesn't mean you have to be this way. Personal opinion, too hard. For me to go break down why, it's not like it's selling for some absurdly low price where I want to do more research. I'm like, listen, even if I take their PE that I entrusted, 30 times PE, what's really happening there? Our community members have it as a hold. 57% have it as a hold, 28% have it as a buy, 14% have it as a strong sell. Be interesting to find out why that is. Not every community member obviously has voted on it, but these are a lot of things to consider here. And this is a company that has a lot of interesting, that's really, really bizarre to me. I want to look at their financials. 16, 12.5, 20, 30, 23, 20. Oh my God, look at the inconsistent revenue, guys. Did they sell stuff off? Let me look at this first. In 18 and 19. No, they bought something. So look at this, guys. This is their revenue over the last 10 years. 16.2, 12.4, 20.3, 30.4, 23.4, 21.4, 27.7, 30.76, 15.5, 25.1, and they just did $11.3 billion in revenue in the fourth quarter. Now, let's look at their quarterly numbers. Let's see how that compares. Last year's fourth quarter was the quarter ending in August. They did 7.75. So they just crushed last year big time. Because they just announced 11.3 billion, was it? Is that what was sent over to me? $11.32 billion. That's incredible. That's absolutely freaking incredible. Wow, that's a huge jump. Amazing. Amazing. Okay. And net income, guys. Okay, so we have a couple of big years. These are probably the big chip years. A big loss here. Why is that? A big loss here. Probably a big write-off there. No, maybe not. Man, that's nuts. That's absolutely crazy. This company is just wildly all over the place. The last 12 months, they've done $6.23 billion in profit. Man, listen, this company to me, let's see if the report is out yet. Let's hit refresh here. Has Q4. There it is. View presentation. Let's pull up this bad boy. Opening the document. Oh boy, that's a lot of crap I don't want to read. I'm pleased to report that in fiscal 2025, Micron's revenue grew nearly 50% to a record 37.4, and gross margin expanded by 17 percentage points to 41%. I bet you're pleased to announce that because that's insane. 50% and a 17% increase in gross margin. Incredible. Wow. Earnings per share over the last quarter, previous quarter, 59% sequential growth, 157% versus the year ago quarter, 59% over the previous quarter. Guys, huge growth. 50% growth in revenue. I mean, this is incredible. Now, for me, what I'm looking at is I want a little more, like, what's the reason for such inconsistent revenue numbers? What's the reason for such inconsistent profit? That's just so bizarre to me. Look, they had a year where they made $14 billion. The last 10 years of profit has been $3 billion, a loss of $276 million, $5 billion, 14, 6.3, 2.7, 5.9, 8.7, a loss of 5.8, and barely $800 million in profit. It's all over the board. This is the why you need to look at a long-term average probably for this company if they're going to continue having inconsistencies here. Okay, now back to the markets. NASDAQ was down almost 1%. Dow was barely down. S&P down a little over 0.5%. The Russell down 0.25%. The Dow's been holding up very strong lately. Have you guys noticed that? Remember, the Dow is not a market cap based index. They care about, and it's completely asinine and stupid, but this is what they care about. Let's say in the S&P, let's say there's a company with a $100 billion market cap and a company with a $10 billion market cap. This company is going to affect the index 10 times more than this one. Makes sense. Bigger company, bigger market cap, bigger net worth, etc. Now, let's look at the Dow. They care about share price. If the stock is selling for 100 versus 10, this one counts 10 times more than this one. You might sit there and say, for those of you who are new, well, Paul, that's correct. Well, wait a second. What if the market cap on this one is 10 billion and the market cap on this one's 1 trillion? This still counts 10 times more than this, even though this company is a lot more valuable. It's absolutely asinine. I don't ever look at the Dow. When people tell me, I remember once a friend of mine, his dad worked at a company, and he was bragging about how they compare themselves to the Dow. And I'm like, well, the Dow's stupid. And he didn't understand why I thought the Dow was stupid. And then I just use it to troll him because I'm a troll like that. And basically my way of like saying like, okay, pal, you're not very smart. But the Dow, even though people refer to the Dow as the market, when I refer to the market, I mean the S&P. Because the S&P is the 500 essentially largest companies in the country based on market cap. So the largest companies will affect it the most. That's why we've seen such a big rise in S&P, even though the Mag 7 have been the ones driving it, because they're the largest companies. So as they go up, they're going to make up a bigger and bigger piece of the gains, which means when they go down, they're going to make up a bigger and bigger piece of the losses just as much. Okay, let's see if there's anything more here on Micron. Did they put their press release? Thank you, guys. Boy, why are they so slow? Somebody fire that intern. Okay, 11.3 billion versus 9.3 billion for the previous quarter and 7.75 billion for the same period last year. Net income, 3.2 billion and operating cash flow of $5.73 billion. 5.73 billion in free cash flow. If they were able to replicate that 4 times, that'd be what? $3 billion, give or take. Yeah, 23 billion. And if you put a 20 times multiple on that, that should make it a market cap of 460 billion. And the current market cap is 187 billion. That's what's incredible here. Now, I'm not telling you that this means, because every quarter is going to be different, but it's something to pay attention to. And maybe Monish is correct about these things. Look at these growth levels, guys. Look at these growth. I mean, look at this. 9.3 to 11.3. Gross margin from 3.5 to 5.04. Look at this. This is the percentage of revenue. Gross margin was 37.7 to 44.7. That's a big jump. That's hard to do. Look at their operating expenses. Barely moved. 1.3 trillion to 1.4 trillion. Barely any movement from quarter to quarter. Even in the last year, 1.215 to 1.4. I mean, guys, these guys crushed it. Operating income more than doubled from 1.5 billion to 3.6. More than doubled. Man, incredible. Let's see how their shares outstanding are doing. Are they diluting people? Let's go see. Financials, income statement. No. Look at these shares outstanding. Basically the same. 1.1, 1.1, 1.1, 1.1, 1.1, 1.1. Basically the same. So they're not even diluting people. Are they buying back shares? No, but it makes sense why they're not buying back shares because the stock is insanely expensive. Let's dig further into the numbers here. Now, here's their outlook for Q1 2026. Now remember, that's still the next quarter. $12.5 billion in revenue plus or minus 300 million. That's huge. 50% gross margin, which is also way bigger than it was before, plus or minus 1%. Operating expenses, barely up still. EPS of 3. Yeah, this company. Guys, if you think this company's going to keep doing this and have these margins and they're going to be at a new level, and even if they only grow from 7 or 8% from here, this might be a screaming buy at this point. Because if you look at it this way, let's look at it. Let's go to a stock analyzer tool. This is very interesting. Something I probably need to pay attention to. Let me do 4, 8, and 12% profit margin. So their profit margin for the last year was like 22%. So let's call it 18, 22, and 26. Actually, let's go higher because it looks like things are getting better for them. Okay, I'm going to do, now free cash flow is a lot lower. Ugh. No, the free cash flow jumped up. Their free cash flow did keep up this last quarter. So what I'm trying to do here, guys, is sit there and say, let's say the company is at a new level of this is their level. This is good. This is a great business. And they're going to keep growing from here. So I'm making a big assumption there. So I want to be very clear on this. This is not me saying these are the correct numbers. But if they're able to have quarter after quarter with this kind of growth, not even this kind of growth, these kind of profit numbers, and they just grow steadily from here, I made these assumptions on Stock Analyzer. We're taking our story, we're taking our numbers, we're putting them together in a Stock Analyzer tool, and then we're trying to see where price and value meet. Because price versus value, we always want to buy when price is below value. Assuming these are the correct assumptions for the next, and is the stock down now? The stock is now down. We were up 4% when we started the video, went to 2.2, up to 3.2, now down. But anyhow, look at this. We have a low price of 100, high price of 318, middle price of 180. So I'm still making big assumptions here, and it's not screaming buy right now, in my opinion. But my assumptions could be wrong. My growth rate was a lot lower than they're probably expecting. That's the question you have to ask here. Guys, thank you for finding our Everything Money Plus channel. We're making this channel all about the deeper dives and the random things we say and do and talk about. It's a whole new revamp of it. We absolutely love it. Now, guys, I went over a lot of key metrics on this main page right here, if you remember. I was on this main page going over a lot of these key metrics. It's really important, if you want to learn about investing, that you understand these key metrics. I've got an absolutely free PDF. Click the link below. We will email you a recap of all of these metrics and why they're important. That way you have it handy for you, so we're speaking the same language and we have the same foundation when we talk about stocks. You're going to disagree with things. That's absolutely expected, and I love it. But I still want to speak in the same language on these. So click the link below. Within a minute or two, you will get the PDF sent to your email, absolutely free. Thank you very much for your time, and welcome to Everything Money Plus.